There is a school of thought that the best stocks or sectors to buy are those that have fallen dramatically. It's a high-risk strategy, but one that could bring big rewards for those with a strong stomach. Mike Santoli runs through some of the deeply discounted groups.
2016 has turned out pretty nicely for Wall Street, with the average U.S. stock gaining more than 10%. But that hasn't stopped the annual ritual of searching for the most beaten down sectors to play for a dramatic comeback in the new year. It's difficult to buck the market tide, but buying stocks that have suffered extreme declines over a prolonged period can offer spring-loaded gains in years to come. A good example from the past year, coal stocks had lost some 80% over 4 years entering 2016. So far this year, coal stocks as a group have more than doubled. In hunting for such potential comeback plays, contrarian investors can start with sectors down more than 50% from their highs over 2 or more years. One group that now meets these conditions is specialty pharmaceutical stocks. Makers of generic drugs have seen their shares drop by 50 to 80% since early 2015 on a litany of concerns over drug pricing and regulatory threats. Names such as Endo International, Teva Pharmaceuticals, and Mylan now trade at unusually depressed valuations. The pricing and policy outlook remain unclear, but is all that uncertainty already priced into those shares? Looking toward the rest of the world, several countries have seen their equity markets battered. Index funds that track the Italian, Turkish, and Russian markets have all lost between 40 and 60% in recent years. Investors looking to diversify might find cheap entry points in these admittedly troubled economies. Another area deeply out of favor, owners of broadcast stations, such as Tribune, AH and Gannett, which have shed more than half their value in recent years. Certainly, the economics of TV are being squeezed, but local television hardly seems destined for extinction. One final extreme laggard, how about uranium stocks? An exchange-traded fund that tracks this industry has fallen for 6 straight years by a total of 90%. There's no sense making these hard-hit investments a central part of one's portfolio, and it's critical to do your due diligence. But in a market now trading near an all-time high, these high-risk, high-reward opportunities offer a chance to potentially profit from stocks that are way down but not yet out. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.